Welcome back, everybody, to The Deep Dive, brought to you by Defiant.
Your on-chain lifestyle sports brand,
That's right.
where we cover everything from DeFi and crypto to sports and entertainment.
We're really your one-stop shop for all things Web3.
We're trying to break down these really complex topics and explain why they matter.
And most importantly, what it means for all of you out there.
Whether you're an OG or a newbie to the space.
Exactly.
So we try to get into it.
Yeah, let's dive right in today.
Yeah, we got a lot to cover.
We do. We've got some big developments in DeFi and crypto.
Some stuff that's really going to change how we even use our digital assets in the future.
Absolutely. So we're going to be looking at things like crypto payment gateways.
Which is super interesting.
I think this could be huge.
Yeah, it's about bridging that gap right between the crypto world and the everyday world.
Totally. So we're going to unpack all of that.
The ins and outs, the different types.
And then we've got the always fun,
Never a dull moment.
never a dull moment topic of stablecoin regulation.
In the U.S. particularly.
In the U.S., so
Yeah.
we'll see.
Which is always a roller coaster.
Oh, yeah, absolutely. So many different players.
Absolutely.
So many different perspectives.
A lot of moving parts.
A lot of moving parts. We'll break it all down for you.
We'll try.
And then we've got something really fascinating coming out of California, a potential landmark move concerning Bitcoin.
Oh, yeah. This is big.
So we're going to get into all the details on that.
Yeah, we're going to look at what it means for Californians, what it could mean for the rest of the country.
Absolutely. And then, of course, we got to end.
Can't forget about the hardwood.
You got to end with a little March Madness action.
You see what's going on there. See how things are heating up.
Absolutely. So are you ready to get started?
I am. Let's do it.
All right, let's kick things off with something that I think is going to change how we use our crypto payment gateways.
Yes.
So we've all heard of Bitcoin, Ethereum, all these other cryptocurrencies.
Right.
But how do we actually use them?
Yeah.
How do we actually
In the real world. Yeah.
pay for stuff with them in the real world?
Right. How do we buy our coffee?
Right, exactly. How do I buy this amazing new
Merch.
Defiant merch drop that's coming
Or
out?
crypto. Yeah, exactly.
So crypto payment gateways, I think, are the key here.
I think so, too.
They're basically the tech that's working behind the scenes.
Behind the scenes magic.
That allows businesses to accept crypto without having to,
Be a blockchain whiz.
become a blockchain expert overnight.
Exactly.
So we're talking about services like, BitPay, Coinbase Commerce, even PayPal's gotten in on the game now.
Yeah, a lot of big names are starting to recognize the potential here.
So why are these gateways such a big deal?
Well, for me, what's fascinating is how they could change how we think about exchanging value.
Okay.
It's not just about convenience. It's about potentially cutting out the middleman.
Okay.
Like, imagine a world where we don't need banks and all their fees to make transactions.
Interested.
We could be dealing directly with businesses peer-to-peer.
Peer-to-peer like true DeFi.
Exactly. And I think that's the key for mass adoption, right?
Right.
People need to be able to spend their crypto as easily as they spend their dollars.
Right.
And these gateways can make that happen.
Absolutely. It's not just good for the consumer either, right?
No, absolutely not.
This is good for businesses.
Huge for business.
It can reach a whole new market.
Right. All these people who are already holding crypto and want to use it.
Exactly.
And they're not really exposed to the volatility risk either.
That's a good point.
A lot of these gateways allow businesses to instantly convert the crypto they receive into fiat.
So they get the benefit of accepting crypto, but without
the risk.
the headache of, is this going to be worth
Less tomorrow.
less tomorrow?
Exactly.
But, theoretically, a business could just accept crypto directly, right?
Yeah. They could set up their own wallet.
They could, why even bother with a gateway?
So that's a good question, and it comes down to practicality.
Okay.
Gateways do a lot of the heavy lifting for businesses.
I see.
They handle things like transaction verification on the blockchain.
Yep.
They manage all the different types of cryptocurrencies.
Right, because there's a lot.
A lot of them.
Exactly. And they even
Yeah.
provide, dashboards and analytics.
So it's really taking a lot of the complexity
Exactly.
out of the equation.
It's all about making it user-friendly for businesses.
And that's really important because,
Businesses have businesses to run.
exactly, they don't need
They don't need to become crypto
to
experts.
become crypto experts.
Yeah.
So our sources talk about two main types of gateways,
Okay.
custodial and non-custodial.
Right.
So what's the difference?
So the key difference is who's holding the crypto
Mhm.
during the transaction.
Okay.
With a custodial gateway, it's kind of like using a traditional payment processor.
Okay.
The gateway receives and holds the crypto from the customer,
Okay.
and then the merchant can usually withdraw it in fiat currency.
Got it.
So it's a more hands-off approach for the business.
Right. So they're not having to manage.
They don't have to worry about the technical side. all their own private keys and wallets and things like that.
Exactly.
And these custodial gateways, they usually handle all the KYC and AML stuff, right?
Exactly. They're all about compliance.
So they're making sure that everything is above board.
Making sure everything's by the book.
What about non-custodial gateways?
So non-custodial is where it gets really interesting.
Okay.
This is more in line with the whole ethos of crypto, right?
Okay.
It's all about control.
Okay.
The crypto payment goes directly to the merchant's own wallet.
So the gateway never actually holds the funds.
Exactly. They never have access to the private keys.
That's a big difference.
It's a big difference.
So does that mean it's more secure?
It can be.
Okay.
Because if the gateway's not holding the funds, they can't be hacked.
Right.
So it reduces that central point of failure.
Interesting. And what about privacy? Is there a difference there too?
Yeah, non-custodial gateways often have less stringent KYC requirements.
So more privacy for the user?
More privacy, but potentially lower fees too, because you're cutting out the middleman.
Makes sense.
And you get full transparency because everything is recorded on the blockchain.
So you can see exactly where your money is going.
Exactly. You have full control.
That's really powerful.
It is. It's very powerful.
But of course there's a trade-off, right?
There's always a trade-off.
The merchant is now responsible for securing their own keys and their own wallet.
Exactly. So it requires a bit more technical know-how.
Right. It's not just plug and play anymore.
Exactly.
So it sounds like there's some pretty big differences between these crypto gateways and the traditional fiat payment gateways that we're all used to.
Yeah, and I think it all stems from the underlying technology.
Okay.
Fiat gateways use, government-issued currencies.
Right.
They rely on centralized banking networks.
So everything has to go through a bank.
Everything goes through a bank, exactly.
Right.
With crypto gateways, we're talking about digital assets.
Right.
We're talking about decentralized blockchain technology.
Peer-to-peer.
Peer-to-peer.
So are transactions faster with crypto?
They can be, especially for international payments.
Interesting, okay.
But there's a catch.
Oh, there's always a catch.
Crypto transactions are generally irreversible.
Irreversible.
Because of the immutable nature of the blockchain.
So there's no chargebacks?
No chargebacks.
So if you accidentally send your crypto to the wrong address,
it's gone.
It's gone.
So it's really important to double-check those.
Triple-check those addresses.
Absolutely.
Okay. It seems like even some of the major crypto exchanges are launching their own payment gateways now.
Yeah, this is really interesting.
Binance Pay,
Yeah.
Coinbase, Commerce, Kraken Pay. What's the deal with these?
I think it's all about creating a more complete ecosystem.
Okay.
They want to connect the trading side of crypto with the spending side.
Makes sense.
So you can buy crypto on their exchange,
Right.
and then you can spend it seamlessly using their gateway.
Right.
They're trying to make it all very user-friendly.
So they have a lot of features like instant conversion to fiat.
Right. They support tons of different cryptocurrencies.
And they often have these developer-friendly APIs.
Yeah, so businesses can customize their checkout experience.
But you still have to be careful. Right?
Always do your research.
What kind of fees are they charging?
Exactly. What are the security protocols?
How are they handling your funds?
Exactly. For example, our sources mentioned that Coinbase Commerce charges a 1% transaction fee.
Okay.
And they also don't have custody of merchant funds in the non-custodial setup.
So it's good.
That's good, but it also means they can't recover your seed phrase if you lose it.
So you're really on your own.
You're responsible for your own security.
Not your keys, not your crypto.
Exactly.
So there's a lot to think about when you're choosing a crypto payment gateway.
Definitely.
What are some of the key things that businesses should be looking at?
Security should be number one.
Okay.
How are funds secured? What's their track record with security breaches?
Right.
Have they been hacked before?
Has there ever been an issue?
Exactly. Then you have to consider the fees. Okay.
They can vary a lot from gateway to gateway
Okay.
than the range of cryptocurrencies they support.
Right, because you don't want to limit your customer base.
Exactly. And then, of course, customer support.
Right.
What happens if something goes wrong?
Who do you call?
Who are you going to call?
Ghostbusters.
Ghostbusters, exactly.
And their reputation overall.
Yeah, what's the community saying about them?
Right.
Are they known for being reliable?
Right.
Do they have a good track record?
So businesses really need to do their research.
Absolutely.
Okay, let's shift gears now.
Okay.
Let's talk about stablecoins
All right.
and the ongoing saga
of regulation.
of U.S. regulation in the United States.
It's a long and winding road.
Oh, it is. So we've been in this state of kind of regulatory flux
Absolutely.
for a while now.
Yeah, we're still waiting for that clear federal framework.
And it seems like there are a lot of different agencies involved.
So many players.
You've got the Treasury FinCEN, the SEC, the CFTC, the OCC, even state regulators. It's like a regulatory alphabet soup.
It is a regulatory alphabet soup, and they're all trying to figure out
How to apply these old rules.
how to apply these existing laws
to this new technology.
to this brand new thing.
Yeah, it's a challenge.
It is so. Why are stablecoins such a focus for regulators?
Well, I think it comes down to risk.
Okay.
Stablecoins are designed to be stable, right?
Right. They're pegged to the dollar or the euro or...
Exactly. They're supposed to mirror the value of a traditional currency.
But
there's still potential for things to go wrong.
we've seen that
We've seen that.
with Terra.
The Terra USD collapse was a huge wake-up call.
It showed that even stablecoins
Aren't always so stable.
aren't always so stable.
Right. And then there's the issue of consumer protection.
Okay.
How do we know that these stablecoins are actually backed by what they say they are?
Right. We've seen issues with Tether in the past.
Exactly. There have been questions about their reserves.
So regulators want to make sure that people aren't getting scammed.
They want transparency.
They want to know what's going on.
They want to make sure that the market is fair and transparent
Right.
and that there's no funny business going on.
And of course, they're worried about illicit finance.
Yeah, they don't want stablecoins to be used for money laundering or terrorism financing.
Right.
They want to make sure that everything is above board.
So it's a lot to consider.
It is.
It feels like we've seen a ton of headlines about stablecoin regulation over the past few years.
Yeah, it's been a whirlwind.
Can you give us a quick recap of some of the key events leading up to, today, March 2025?
Okay, so back in 2019, remember Facebook announced Libra?
Oh, yeah.
That really kicked things into high gear.
It got everybody's attention.
Regulators were like, whoa, hold on a second.
Right.
This is a big deal.
And then in 2020, the OCC clarified that banks could hold reserves for stablecoins.
That was a big step.
That was a big step.
It legitimized stablecoins in a way.
Right. It brought them into the traditional financial system.
Yeah, and then in 2021, the CFTC fined Tether for misleading statements about their reserves.
That was a big one.
Yeah, that really put the spotlight on transparency.
Right.
And then, of course, the Terra USD collapse in 2022.
Yeah, that was a major turning point.
It showed that the risks were real.
Right.
And then in 2023, we had the NYDFS ordering Paxos to stop issuing BUSD.
Wow.
And the SEC suggesting that BUSD might be an unregistered security.
So things are really heating up.
They are. And then the Silicon Valley Bank collapse.
Oh, yeah.
That really highlighted the custody risks.
Right, because USDC briefly depegged.
Exactly.
Because they had some of their reserves at Silicon Valley Bank.
It showed how interconnected everything is.
It really did.
And then on the legislative side, we've had the Clarity for Payment Stablecoins Act,
Okay.
which was approved by the House Financial Services Committee in 2023.
So that was a big step forward.
It was, but it still has a long way to go.
And then we had Senators Loomis and Gillibrand introducing their own bill.
The Payment Stablecoin Act, trying to find a bipartisan solution.
And then more recently, Senator Haggerty introduced the Genius Act,
which also had bipartisan support.
So it seems like there is some momentum.
There is some momentum, but we're still lagging behind other countries.
Right.
In terms of having a clear and comprehensive framework.
So let's talk about those other countries.
Okay.
What are they doing?
So the EU, for example, has MiCA.
MiCA.
The Markets in Crypto Assets Regulation.
Okay.
It's a really comprehensive piece of legislation.
So it covers all aspects of the crypto industry.
Yeah, it includes stablecoins.
Okay.
It sets clear rules for licensing reserve requirements.
So they're really trying to create a level playing field.
Exactly. And the UK is also moving forward.
Right.
They're classifying stablecoins as a form of digital money under their Financial Services and Markets Act.
So they're bringing them within their existing regulatory framework.
Exactly.
And what about Asia?
So Japan has a very strict approach.
Oh, wait.
They only allow licensed financial institutions to issue stablecoins.
So it's basically banks only.
Pretty much. And Singapore and Hong Kong are also moving towards comprehensive regulation.
So it seems like everyone is taking this seriously.
They are.
Except maybe the U.S.
Well, the U.S. is getting there.
Slowly.
But it's a slow process.
And what about the political climate here?
Okay.
We know that President Trump has been very vocal about his opposition to a U.S. CBDC.
Right. He's not a fan of the digital dollar.
So how might that impact stablecoin regulation?
So that's a really interesting question.
Sure.
If the U.S. doesn't have its own CBDC,
Right.
then private stablecoins could become even more important.
Because they'll be the main way to represent the dollar digitally.
Exactly. And that could make regulation even more urgent.
Because
they want to make sure that these private stablecoins are safe and reliable.
Right.
If they're going to play such a central role in the economy.
It's a really fascinating dynamic.
It is.
So the U.S. is definitely at a crossroads.
Definitely a lot of big decisions to be made.
All right, let's move on to something a little more concrete.
Okay.
California's new digital asset bill.
Yeah, this is exciting.
This includes some pretty significant protections for Bitcoin users.
Huge for Bitcoiners.
So if this bill passes...
It would guarantee the right to self-custody for almost 40 million Californians.
Wow.
And it would prohibit discrimination against Bitcoin use.
So you couldn't be denied service for trying to pay with Bitcoin.
Exactly.
That's huge.
It's a big step towards mainstream adoption.
So who's behind this?
Assembly member Avelino Valencia.
Okay.
He's the chair of the California Assembly Banking and Finance Committee.
So a pretty powerful position.
Yeah, he's been instrumental in pushing for these Bitcoin rights protections.
And what exactly do these Bitcoin rights entail?
So according to Dennis Porter, who's the CEO of Satoshi Action Fund,
All right.
the bill aims to provide much-needed regulatory clarity for Bitcoin in California.
Okay.
It would protect public entities from trying to restrict or ban the use of Bitcoin.
So they couldn't say you can't use Bitcoin to pay your taxes or something like that?
Exactly. And it would also establish a framework for handling unclaimed digital assets.
Yeah,
So, like, if someone passes away and they have Bitcoin,
right.
the bill would make sure that it's handled properly.
And not just lost in some government vault.
Exactly.
So this is really about protecting people's property rights.
Absolutely.
Chair Valencia also believes that the bill would strengthen government integrity
Right.
by expanding the scope of the Political Reform Act of 1974.
To prohibit public officials from promoting specific digital assets.
So they couldn't be like, oh, you should buy this coin.
Exactly. It's about preventing conflicts of interest.
That makes sense.
Yeah.
Porter sees this as a potential model for other states to follow.
Absolutely. He thinks this could be a blueprint for the rest of the country.
So California leading the way, as usual.
Yeah, paving the way for Bitcoin adoption.
This is a really fascinating development.
It is.
And I think it's going to be really interesting to see how it plays out.
Yeah, we'll be keeping a close eye on it for sure.
All right, let's take a break from all this serious stuff.
Okay.
And talk about something a little more fun.
Let's talk hoops.
March Madness.
March Madness.
It's heating up.
It's getting down to the wire.
It is, Duke is looking really strong.
Yeah, they're looking like the team to beat.
They just dominated Alabama to reach the Final Four.
Even with Cooper Flagg having an off night,
That's what's so impressive.
it shows how deep their team is.
Right.
They're not just relying on one player.
It's a team effort.
Exactly. And their coaching is top-notch.
Absolutely.
They're well prepared for these big games.
And the USC women's team, they're also making a run.
Yeah, they're in the Elite Eight.
Even without their star player, Juju Watkins.
That's right.
They pulled off a really close win against Kansas State.
It was a nail-biter.
It was so exciting.
Yeah, those are the games you remember.
Absolutely.
The ones that come down to the wire.
So it seems like momentum is key at this point in the tournament.
Momentum coaching, clutch performances.
It's all coming together.
Absolutely, and you can never underestimate the power of the home crowd.
So true.
Those fans can really make a difference.
All right, that was a great recap of all the action.
Yeah, we covered a lot of ground.
So let's bring it all together.
Okay.
What are the key takeaways for our listeners today?
I think the biggest thing is that the world of crypto is constantly evolving.
Right.
We're seeing new technologies like crypto payment gateways emerging
Right.
that are making digital assets more accessible and easier to use.
Absolutely. And on the regulatory front,
There's still a lot of uncertainty,
there is.
especially in the U.S.,
Right.
but we're starting to see some progress.
Slowly but surely.
Slowly but surely. And then we have these really interesting developments at the state level.
Like California's Bitcoin bill.
Exactly, which could have national implications.
It could set a precedent for other states to follow.
Absolutely. And of course, we can't forget about March Madness.
The excitement never ends.
It's always a great time of year for basketball fans.
And a great reminder that teamwork and resilience are key to success.
No matter what field you're in.
Absolutely. So that's it for this deep dive.
Another one in the books.
Thanks for joining us.
It's always a pleasure.
And be sure to subscribe to the Defiant Podcast for more insights and analysis on all things Web3.
And to stay up to date on all the latest developments.
Brought to you by Defiant, your on-chain lifestyle sports brand.
We'll see you next time.
Now, one last thought to leave you with as you go about your day.
Okay.
We've talked a lot about how the U.S. is lagging behind other regions in terms of stablecoin regulation.
Right.
So what do you think the long-term implications of that might be?
So I think it's a really important question.
Yeah.
Will the U.S. fall behind in the global race for crypto innovation? Will businesses and talent move to more crypto-friendly jurisdictions?
Right. Will we miss out on the economic benefits?
These are all things to consider.
And what about California's Bitcoin bill?
Yeah, how will that impact the national conversation about digital asset regulation?
Could it be the catalyst for a more unified approach?
Or will we see a patchwork of state-level laws?
Right.
It's a really fascinating time to be following this space.
It is. There's so much happening.
And it's all moving so fast.
So stay tuned. We'll be here to break it all down for you.
We'll be back next week with another deep dive.
So until then, keep it defiant.
Keep it defiant.